Bitcoin and Ethereum ETF staged dramatic $340 million reversal after brutal sell-off, accumulation phase beginning. Bitcoin ETFs, Ethereum ETFs. Despite the market turbulence, the broader trend shows resilience, as total inflows for 2025 reached $48.7 billion, surpassing full-year 2024 totals, thereby underscoring growing institutional adoption. Journalist Hassan Shittu. About author Hassan, a cryptonews.com journalist with 6+ years of experience in Web3 journalism, brings deep knowledge across crypto, Web3 gaming, NFTs, and play-to-earn sectors. His work has appeared in Author Profile, Share, Copied, last updated October 15, 2025. After one of the most turbulent weekends in months, U.S. spot Bitcoin and Ethereum exchange-traded funds, ETFs, staged a dramatic turnaround on October 14, recording a combined net inflow of $338.8 million. The rebound comes just a day after the same funds saw over $755 million in withdrawals, suggesting that institutional investors may be shifting back into accumulation mode. According to data from SoSo, Bitcoin spot ETFs pulled in a total of $102.58 million in net inflows on Monday, while Ethereum ETFs attracted $236.22 million. The recovery follows a weekend sell-off that erased more than $500 billion from the crypto market amid renewed US-China trade tensions and a wave of liquidations across exchanges. With the reversal after the brutal weekend and days that follow, is it a sign for accumulation or just a blip? Speaking to Crypto News, Kevin Lee, Chief Business Officer at Gate, described the rebound as encouraging but premature. One strong inflow day is a constructive signal, not a verdict, he said. To call it durable, we need consistent net creations across issuers and normalization in futures and options. Lee added that sustained ETF inflows and diversification across both BTC and ETH products would confirm a true return of institutional confidence. ETF buyers are price-insensitive allocators who rebalance into weakness, he noted. This reversal shows risk appetite remains intact, though data will drive Q4 flows. Siraj Ahmed, CEO at Burgies, took a more optimistic view. I'd call this the first real sign of early accumulation rather than a random blip. Institutions don't chase panic, they buy fear. And that's exactly what this looks like heading into Q4. With ETF inflows rebounding, on-chain accumulation rising, and macro conditions stabilizing, analysts suggest that markets could be entering a renewed build-up phase after last week's sharp correction. Bitcoin and Ethereum ETFs see renewed demand after $900 million outflow week. Fidelity's Wise Origin Bitcoin Fund, FBTC, led the charge with $132.67 million in new inflows, bringing its total historical net inflows to $12.74 billion. Bitwise BITB followed with $7.99 million in inflows, while BlackRock's iShares Bitcoin Trust, IBIT, saw $30.79 million in redemptions. As of October 14th, Bitcoin spot ETFs collectively hold $153.55 billion in assets under management, representing 6.82% of Bitcoin's total market capitalization. Cumulative inflows have now reached $62.55 billion, while daily trading volumes stood at $6.92 billion, reflecting strong investor activity even amid ongoing volatility. Ethereum ETFs saw even stronger momentum. Fidelity's FETH led the pack with $154.62 million in inflows, followed by Grayscale's ETH with $34.78 million and Bitwise ETHW with $13.27 million. Total assets under management across Ethereum ETFs climbed to $28.02 billion, equal to roughly 5.6% of Ethereum's market capitalization. The swift turnaround follows 3 consecutive days of redemptions that began on October 10th. During that stretch, Bitcoin ETFs lost $331 million, while Ethereum ETFs saw $611 million in outflows. The renewed inflows suggest a shift in sentiment toward accumulation rather than retreat. It appears institutional confidence never really faded, said Ivo Georgiev, CEO and founder of Ambire, speaking to Crypto News. Data supports that view. Despite market turbulence and more than $20 billion in leveraged positions liquidated across exchanges, CoinShares reported $3.17 billion in inflows last week, even as over $20 billion in leveraged positions were liquidated across exchanges. Analysts say this resilience points to sustained institutional demand. Despite the turbulence, both Bitcoin and Ethereum showed signs of resilience. At press time, Bitcoin is trading around $113,054, up 1.1% in the past 24 hours but down 7.2% over the week. Ethereum rose 4.3% on the day to $4,180.55, though it remains about 15% below its all-time high of $4,946. The quick rebound in ETF flows and price action suggests that, while retail sentiment remains cautious, institutional demand for crypto exposure is far from over. Institutional confidence quietly rebuilds as crypto ETFs near $1 trillion in assets. Market data indicates that institutional confidence may be quietly rebuilding. ETF analyst Eric Balchunas noted that overall crypto ETF assets are nearing the $1 trillion milestone, with an estimated $30 billion in inflows recorded in just the past 7 days. Bitcoin ETFs alone added over $1 billion in new capital during that period, underscoring sustained institutional demand even as prices consolidated. According to Ivo Georgiev, the recent liquidation event did little to shake long-term institutional confidence. It appears institutions are simply taking advantage of this period to increase their spot positions, he said, adding that the muted price reaction relative to the scale of liquidations suggests deeper accumulation under the surface. Meanwhile, macroeconomic signals are turning more favorable for risk assets. Federal Reserve Chair Jerome Powell suggested this week that the central bank may soon end its balance sheet reduction program and prepare for possible rate cuts, citing weakening labor data. On-chain metrics also support the idea that accumulation is underway. CryptoQuant data shows that short-term Bitcoin holders, those owning coins for less than a month, have increased their supply from 1.6 million BTC to over 1.87 million BTC in recent days. Analysts interpret this as fresh capital entering the market and forming a new demand floor following the correction. Ethereum data tells a similar story. Exchange data shows that the Ethereum supply held on Binance has dropped to a multi-month low of 0.33, signaling that investors are moving coins to self-custody. Historically, such withdrawals have preceded upward price movements as available exchange supply tightens. Follow us on Google News, Trending News, Recommended Popular Crypto Topics Price Predictions. XRP Price Prediction. SEC filings hint at imminent ETF launch. Is this XRP's moment to hit $1,000? WazirX wins court nod in Singapore for debt restructuring scheme. CEO says Fed Chair Jerome Powell's speech tomorrow could trigger a crypto market crash. Here's what to expect. New ChatGPT predicts the price of XRP, Dogecoin, Pepe by the end of 2025. Costia Kudo. What we know about crypto traders' suicide. Price analysis. XRP price prediction. Ripple's swell 2025 event could change everything. 3-week countdown begins now. 22 hours ago. By Alejandro Arich. Bitcoin News. Why is crypto down today? October 14, 2025. 1 day ago. By Seed Fadil Pazik. Altcoin News. Crypto whale opens new $163 million Bitcoin short after $192 million win. 2 days ago. By Amin Ayan. Best crypto to buy now in October 2025. Top crypto to invest in. October 1, 2025. By Alan Draper. New cryptocurrencies to invest in today. Top new crypto coins. 2 days ago. By Inesis Tavares. 14 best crypto presales to invest in 2025. Presale crypto list. 4 hours ago. By Alan Draper. 15 new and upcoming Coinbase listings in October 2025. 5 days ago. By Elijah Rankovich. 13 new and upcoming Binance listings in 2025. 1 day ago. By Elijah Rankovich. The next crypto to explode in 2025. Our top picks. 1 day ago. By Elijah Rankovich. Bitcoin, BTC, Price Prediction 2025 to 2030. 14 hours ago. By Leon Waters. XRP. Price Prediction 2025. 2026 to 2030. August 29, 2025. By Eric Huffman. Ethereum Price Prediction 2025 to 2030. October 3, 2025. By Ben Beto.